Hello, everyone. I'm Kevin Mofid. I'm Head of Industrial and Logistics Research at Savills, the property advisor. I've got a presentation today about the state of the warehouse property market in the UK. You'll have heard over the last 18 months, the demand for warehouse space has rocketed dramatically. And what that's meant is that the availability of warehouse space has started to decline quite rapidly as well. My presentation is going to look at some of the facts and figures around the logistics property market in the UK, and offer some guidance really on what occupiers of warehouse space should be thinking about if they're looking to acquire more space at the moment, where rents are heading, and some other wider issues that I think are relevant to people looking to acquire warehouse space. The slides are available for download. I will be happy to take any questions. My contact details are at the end of the presentation. So I'll get into it, and start to talk about what's driving the market at the moment. The first thing to say really is that the market really has never been stronger. In the first half of 2021, we saw over 24 million square feet of new leases signed on warehouse space in the UK. That's the strongest half one that we've ever recorded. 82% above the long-term average. Vacancy is now at its lowest level, 4.37%. Now, we have a rule of thumb that says rents will always rise when the vacancy is below 12%. So you can see, bearing in mind we're at the lowest level ever recorded, there is a strong rental growth environment at the moment. And whilst that might be great for the landlords and developers of warehouse property, if you're looking to acquire new space, that's not necessarily good news, because what it also means is that lease lengths are rising, incentive packages are falling. It's very much a landlord's market at the moment. So I'm sorry to be the bearer of bad news in this, but I think actually presenting these facts and figures will help you make your business decisions moving forward. As I mentioned, it is a record. With 2020 was a record in itself. Almost 50 million square feet transacted. I think we're going to be broadly at the same level for 2021. Maybe not quite as strong, but still, above 40 million square feet. Which compared to historical norms, as you can see on this chart, is quite an astonishing state of affairs, given what's been going on in the wider world over the last few years. A couple of other stats, I mentioned that we're above the long-term average. One thing to note as well, though, is that 25% of the take-up in 2021 has been to Amazon. Now, that's in floor space terms. It's not quite the same if we look at it in the number of deals. Amazon is around 10% of the deals. So 90% of the market in absolute terms isn't Amazon. And I think that's a really important thing to say, because what it shows is that there's a wide variety of demand from logistics companies, parcel companies, retailers, food retailers, manufacturers, and so on. So it's a very buoyant and diverse market at the moment. If you're looking to acquire new warehouse space, you're going to be competing with companies from a wide variety of areas. Now, one of the other things that I think is really important to say is as I was mentioning just a minute ago, it's not just Amazon. If we look at this chart, 3PLs, companies Eddie Stobart, Wincanton, DHL, they actually took the highest amount of space they've ever taken in 2020, almost 10 million square feet, and it's almost 6 million square feet so far in 2021. Why is this? Issues around Brexit, issues around supply chains, issues around supply chain vulnerability, could all be factoring through into the reasons why 3PLs are taking much more space. Historically, the average was about 5 million square feet a year. So that's a big step change in terms of who's taking space and why they're taking it. The other thing that I think is quite interesting, 2020, we saw a huge amount of warehouse space taken for buildings over 500,000 square feet, these mega shed type buildings. That's reverted somewhat in 2020 so far. We've seen a much higher concentration of much smaller deals, around the 100,000 square foot category mark. Um, I think over the course of this year, it will even out. And actually, we're in a situation where the average size warehouse is getting bigger on the whole. There's a danger of reading too much into statistics at the half year. Um, One of the reasons I think this is we've done a survey with Analytica, Property Week, and Tritax. We've done it for the last 4 years. And almost 90% of the respondents to that survey suggested that they're going to need the same amount or more warehouse space over the next 2 years. So that's a very positive driver of demand. Breaking that back, again, you can see there in the top right, it's the logistics companies, the 3PLs, who are driving that growth. Retailers less so, and manufacturers even more less so. So it's a really interesting dynamic in terms of who's going to take the space moving forward. Another reason why I'm quite bullish on the demand for warehouse space is we track every single requirement for warehouse space that comes across our desk. So whenever a company issues a requirement for warehouse space, we log that data. And I want to draw your attention to two things here. One, we've logged almost 300 million square feet of requirements since January 2020. And if you look, almost a third of them have been for 500,000 square feet plus. And that yellow line on that chart, you can see how the demand for those bigger units has continued to feed through into the requirement data that we are seeing. Now, I just want to focus in on supply very quickly. If we cast our minds back to the GFC times, 2008, 2009, we had almost 100 million square feet of warehouse space vacant. That gave us a vacancy rate of almost 25%. That was very much an occupier's market. You could drive the deals that you wanted to drive. Fast forward 10 years, vacancy is now around 4.5%, and the supply is around 25 million square feet, historically low. If we compare that with where we were a decade ago. So the supply is heavily constrained. Now, if we just look at this by region, we get a slightly different picture. What I want to draw out of this chart is how much of the space is actually good quality, grade A space, because what we are clearly seeing in our data is that occupiers want good quality modern warehouse space, and that is our grade A space. Now on here it's the grey and the purple. Let's just look at the two top markets, Southwest, West Midlands. They've got the highest amount of supply, almost 4.5 million square feet in each case. However, probably around a quarter of that supply is grade A. The rest of it is much poorer quality buildings, grade C, grade B. These are older second-hand buildings. They may have lower eaves heights. They may have smaller yards. They may not have the amount of doors that you need. So actually the grade A space here is what's key, because what we are definitely seeing is that occupiers want that grade A modern fit for purpose building for the omni-channel supply chain. So it's quite interesting to see. Southeast, East Midlands, they have a slightly higher proportion of grade A, but still not huge by anyone's imaginations. And again, just looking at that at a nationwide level, you can see here the orange line. Pre-pandemic, almost 60% of the supply that we had on the market at any one time was classified as grade A. That's fallen to below 30% now, the lowest level it's ever been. So you can see here there's a real pinch point on the supply of modern grade A warehouse space. And another thing that I just want to bring up here, this chart, the two lines, the top line shows the total amount of second-hand supply on the market, and the bottom line shows the total amount of new supply on the market. Now, when the pandemic started, early 2020, we expected the second-hand supply to start increasing quite dramatically. Companies going into administration, companies going under, returning that second-hand space to the market. We have seen that in some way. Companies have returned space to the market. They've come out of buildings. However, what has been happening is those second-hand buildings have actually been leasing very quickly. So the actual number of buildings on the market as second-hand has actually been staying at a pretty stable level. And actually into 2021, you've started to see the amount of second-hand supply start to decrease as well, in line with the new supply, which, as you can see from the bottom line, has fallen quite dramatically. So the point here is that yes, we've got a pinch point on the availability of new buildings, but also as we roll forward into 2021, companies who can't get hold of new buildings are taking those second-hand buildings, and you're beginning to see supply fall in both categories, which is something we haven't seen for quite some time. Now, the market has reacted to this. We've got almost 17 million square feet of warehouse space under construction at the moment. You've got almost 3.5 million square feet in the East Midlands, around the same in the Southeast, around 2.5 million in Yorkshire, and then around 2 million in the Northwest and the West Midlands. Some markets, the Northeast, Scotland, Wales, very little new development coming forward. Um, Now, this is market forces in a way, and this is a good thing for occupiers. We do have a decent amount of speculative development coming forward, which should ease the pinch points somewhat. This is all scheduled to complete in late 2020 and into 2022. However, we do have a number of problems at the moment with bringing forward new developments. Now, you may have seen a lot of headlines in the press: construction materials shortages, timber, steel, concrete, cladding. All of these are in very short supply at the moment. I was speaking to some cladding manufacturers recently. Typically, they historically would work on lead times of around 3 or 4 months. In some cases now, that's up to 18 months. So the conclusions that we're drawing from this are that yes, we've got 17 million square feet under construction at the moment, but there is a high likelihood that some of that space is going to be delayed. It simply cannot be built quick enough, to coin a phrase. So what that's going to mean, unfortunately, is that some of the buildings that are under construction at the moment, they're leasing during the construction. Some of that speculative development is actually, unfortunately, going to be delayed because of the supply chain issues that we find at the moment, which, by the way, is probably a 18 to 24 month issue we have here with the availability of these materials. So what does that mean? Well, it means that the supply of grade A buildings is going to be constrained even further. But again, from your planning, what does it mean for the rental levels for warehouse space? Now, we buy in rental growth forecasts from a company called Real4, and they're forecasting around 2.9%, 2.7% growth for the next 5 years. Given where vacancy is at the moment, given how high demand is, and if we add in these wider structural issues with the availability of construction materials, I think there's a very strong case to say that actually rents are going to rise by more than 2.7% over the next 5 years. Speaking to some of our agency teams over across the country, in some parts of the country, we've seen rental growth of over 5, maybe even 10% already this year. So as an occupier, I would be budgeting for much higher rents, unfortunately, than has been accustomed over the last 5 to 10 years because of these wider issues that we have at the moment. Now, I want to just bring up something that I think is quite interesting at the moment. If you own property freehold, um, the capital markets side of the property market has never been stronger. So what I mean by this is that pension funds, private equity companies, they are all hugely targeting the logistics property market at the moment. Historically, people may have wanted to invest in shopping centres or office blocks or so on and so forth. Now, a lot of money is targeting the logistic property market. And if you own your property freehold, there has probably never been a stronger time to consider what we would call a sale and lease back. That's when you sell the property to a property investor and then take a lease back on the property. Um, depending on the size of the building and the lease you want to take, this can free up capital to invest into the wider business. So definitely something I think is worth considering if you are an owner occupier of warehouse space, because there has never been a better time to target the investment market to bring capital into your businesses. So now, just to wrap up for the last few minutes, I want to talk about a few structural things that I think are going to impact the warehouse property market going forward. So online retail. We buy in property for online retail forecasts from a company called Forrester. They're estimating that by 2025, online retail is going to be 37% in the UK. That's up from 20% pre-pandemic. Um, that relates to an extra 64 million square feet of warehouse space being needed just for online retailers. There's some research from Prologis that states for every £1 billion extra spent online, we need an additional 775,000 square feet of warehouse space. Why do I bring this up? Well, the reason is that the demand isn't going to fall. If anything, it may rise because of the growth in online retail. So I would be considering that we are in this position of very high warehouse demand for at least the next 5 years. Another thing I want to talk about here, and I'll just click through these animations. Supply chains are a trade-off. You will know this better than me. I've been reading some textbooks in lockdown, and this is a chart that I just thought that was quite interesting. Supply chains historically have been a trade-off between holding inventory, the flexibility of the supply chain, and how vulnerable the supply chain is. Historically, we had a quite lean supply chain where we didn't have as much inventory as we could. The supply chain was relatively flexible, but it was a relatively lean supply chain. Now, if we look at issues around Brexit, congestion at the ports, nearshoring, all of the wider supply chain issues that we're seeing at the moment, I think there's a case to say that we are moving into a period where supply chains are going to be more resilient. They're going to have a higher amount of inventory. They're going to be less vulnerable, less flexible, because people are talking about this, just in case supply chain rather than a just in time supply chain. Well, that's great. Um, Again, for the property market, that's probably quite a good thing, because I think it's going to result in the need for more warehouse space, put simply. And we're seeing this again. I mentioned the survey we've been doing, and around 25-28% of people are going to start to reshore and increase the amount of stock that they hold. We're going to be rerunning this survey in Q4 of this year, so I'll be really interested to see how this changes as a result of what's been going on over the last 12 months. Another thing that I think is really interesting is green and sustainable features within a warehouse. Historically, around 50% of our respondents said that this was very important or important. Fast forward to 2020, 67% of our respondents said that green and sustainability was really important when they were considering a new warehouse. Really interesting to see that the number one point is building affordability, rent, service charge, etc. Well, again, from the slides I've shown you, I think that the rents are only going one way. So again, it'll be interesting to see if that becomes even more important in the next survey that we do. To wrap up, we've been doing some really interesting work over the lockdown period. We've done some work on cold storage. We've done some work on manufacturing. We've done some work on port-centric logistics. We've done some work on vaccine production, all with the the angle about, what does this mean for real estate. If you're interested in having a look at any of those reports, they're on our website, or you can contact me. So to wrap up, really what I'm saying here is that we are in a sustained period of high demand and low supply. When these conditions are entrenched for as long as they are, market forces prevail, and that really is higher rents, longer leases, and so on. So my advice to you is, if you're considering acquiring new warehouse space, you need to think in the long term. You need to be thinking about when the lease events are on your buildings. You need to be acting, well within 12 months of wanting to make a decision, looking at what's available, thinking what could be coming to the market, thinking how those construction issues may impact what your business plans are. So a whistle-stop tour of the property market and how it's affecting logistics companies and logistics occupiers moving forward. My details are there. Do feel free to contact me if you have any questions. Thank you very much.